Today is a big day. Today is Tesla earnings day. And most of the other commentators and analysts will chip in after earnings, and I will do so too. But much more important than that is chip in before earnings so we understand how we go into this session and maybe position ourselves accordingly before so we can maybe capture some alpha here. Most people don't comment on that because it's a risky game, but I will tell you today how I view these earnings and what I do to go through this with the best chances of adding some alpha to the portfolio, positioning myself and adding just the right amount of risk. So what are we talking about here? A lot of people talk about Tesla earnings and the expectations. And I will just give you a very quick overview of what people think. Now, there is some attempts by a lot of other people to guide you through all the little, per share estimates for income and then go down deep into deliveries, into energy, into all these things. I'm not a big friend of that game because that game is better played by analysts, fundamental analysts who are really into the core business and do all these things. I think it's actually not that important to do that, and I will explain that in a second. Before we do so, let's take a quick look into what's going on. So the earnings estimates here are actually the following. We have 33 cents adjusted EPS. That is consensus, 20 analysts. We have broader analyst consensus from FactSet and Refinitiv, 0.36 to 0.37 cents. All of that probably doesn't mean much to you guys. I did the math on it. What does it mean? In absolute terms, $1 billion in net profit this quarter, or 1.3 billion in net profit. That is the low end and the high end estimates. Now, my first commentary on this is we have to think about what that actually means in robotaxi terms. Because all of us know that this will be a bad quarter. All of us know that, we are going to miss some deliveries. We already know all the delivery numbers. We know we missed on energy. We know if we will be on the lower end, maybe. But that's already baked into these estimates. So expectation game is pretty clear here. But why is this not so important for us who are looking forward to what's going to come? I have an extremely simple little math here. You know that I zero in on the actual important math. If you assume $60,000 in margin per robotaxi per year, okay, you have a $1 billion estimate here on the low end. This is the equivalent of 16,600 robotaxis. Of course, this is per quarter, but let's say this is annualized, right? 16,000, we can multiply this with 4 if you want to actually get to the annualized robotaxi situation. So these need to actually operate a whole year, and then we have to basically multiply this by 4. So that is the number of robotaxis you would need to actually get to that quarterly amount, right? This is the quarterly amount you actually need. So let me just explain that in more plain terms. If you had 66,000 robotaxis in operation, you would basically double the entire net income of Tesla. Okay, you would make $1 billion in net income per quarter, roughly. 66,000 robotaxis. Okay, but now we're talking about Tesla is not going to miss this number by 100%. They're going to miss maybe by 10%, right? If things go bad, we're coming in at 29 cents or whatever. It's a miss by 10%. What is that 10% in robotaxis? It's actually 1,600 or annualized. We're talking about 6,000 robotaxis. Okay, now you can do the math. If we miss by 10%, just 6,000 robotaxis offset the entire miss. And that is why the misses, while the core business right now doesn't matter too much. It doesn't matter if we miss a little bit here and there. It is much more important for quantitative reasons. What is the robotaxi trajectory and what is Tesla going to say in terms of guidance? Okay? Because if they guide anything where someone can say, well, I'm now ramping up my expectations from 6,000 to 12,000 this year, or from 12,000 to 40,000, whatever it is, or from 10,000 to 200,000 next year, any of these numbers, any adjustments of these numbers will absolutely beat a miss or beat on the income per share. And that is why analysts are actually not looking at that too much. I'm not saying a miss is great, but you see what's going on here. Any kind of change in the outlook for robotaxi will massively override to the downside or upside that miss number, if we have a miss number at this point. Now, that is why everyone will be looking for guidance and will be looking for what Tesla is actually saying in terms of where we stand with robotaxi rollout. Now, we also know that they are not going to say much. I'm very convinced that Tesla will, as always, not say much. They're going to say the following. I can already tell you what they are likely going to say about that. I'm going to say it's going well. We are rolling out robotaxis, as you can see in the news, continuously. We just added Dallas and Houston. We are now putting unsupervised robotaxis into them, but we take it slow and cautiously, and we make sure safety is first while we are preparing the greater rollout. We also got approval in the Netherlands and Europe, which is an important domino to unlock all of Europe. When it comes to actual deployment of the robotaxis, we'll take it with safety first and do the rollout diligently so we keep it safe. But we are very confident that the rollout will continue, and we are all very excited. That's what they're going to say. They're not going to give anything away, and everyone knows already everything that is there to know. We know Cybercab is scaling. We know rollout is slow, but we know rollout is continuous. We know in recent days and weeks we had some step changes on the unsupervised level, but on a low base. And now it's up to everyone to think what's happening. That is my expectations for these earnings. In short, similar story to all the previous earnings of the last 4 quarters for Tesla. I do not expect great surprises. That is my bottom line. If you connect all these dots, I do not expect great surprises. And that leads me to my strategy. Okay? My strategy for this earnings call is actually the following. I'm looking at the whole thing on a meta level. I'm not trying to beat everyone else in having a better estimate on what is going on with deliveries, what is going on with margins. I don't care. I trust the market to do their homework. I trust Tesla to not surprise too much. I trust Tesla to not massively surprise to the downside or do something massively stupid in terms of saying something concrete. Oh, we are stopping the rollout of robotaxi. All of that would be devastating. I think they're going to play it low ball. Going to say it's all good, we're continuing, safety first, rollout continues, everything nice, and the actual numbers won't play a big role. In a situation like this, when it comes to the stock and how we trade this whole situation to generate alpha and have the odds on our side, which is always my mantra, get the odds on your side. No one knows the future, but we can predict the future in a way that puts the odds on our sides. That is why this chart might be the most important one when we look at earnings. And that is Polymarket, finance, equities. Will Tesla beat quarterly earnings? You very recently saw this drop basically on April 21st, so on Monday. Or what was this? On Tuesday, yesterday. When Tesla actually underperformed. Tesla didn't perform great, the stock, when you go back. Right? Today, looking good, but we also see that market is up. Tesla is up, let's see. Bad, not very impressively, like Tesla should be up 2.2% on its beta of 2 to the Nasdaq, but it's basically only up half as much as the beta suggests, which means no one is really bullish right now. You also see on the 21st here, Tesla not performing very great, actually going down. Started out here at 400 and dropped $10. Okay, not great because the Nasdaq was actually not too bad. So why is that? Well, you can compare it with this chart, and what you see is that yesterday the expectations that Tesla will beat earnings dropped from 33%, already not great, all the way down here to 20%. That is probably the reason. For some reason, something leaked. Probably, if you see something inorganic like this drop, probably some leak, someone knows something, got the numbers first, knows they're not going to beat, they're probably going to miss a little bit. And now we are down here at 18%. Okay. Why do I like this? I like this setup because it provides a high level of certainty. We know that Tesla is very likely not to beat earnings, maybe miss it by a little bit, okay? We know that the market knows. We know that the stock is underperforming right now into earnings, and all of that makes it much less likely that we see a big drop in earnings. That is very important information for me because I like options, as you know, my core position, but to generate constant alpha and Pioneer Alpha, we want, of course, to have an advantage. The options markets are often not that well synced up with the fundamentals, so they're just putting their premiums on. They have very high premiums, like roughly $10, based on a 390 put or call. So you're getting $10 for free. A move of $10 is basically built in. And when you look at this situation, I find it very attractive. And here's why. Whatever move is basically built into the stock. Let's say there was a 10 point move based on some disappointment. Maybe let's make it a 20-point move. Let's be aggressive. Let's say they miss, and normally the stock would drop 20 points. But now we have already anticipated that because only 18% believe it's built in. So basically only a fifth probability is left. And the way to do the math on that is if you have an expected move of, let's say, 20. We only have an expected move of 10, by the way, but maybe that's a little bit built in. Let's say it was 20. But now the market already assumes 80% of that 20 has been built in, which is 16. So we are basically already down 16 points going into earnings because people already assume this is going to happen. That's how you think about it. That's how I think about it. So basically the stock should be at 405, 406, 407 naturally without earnings. Now people know earnings are going to be bad. They drop the stock as if earnings already happened, but with a certain probability on it. Let's say 16 points down. That's basically what I read into this chart. And that means the odds that it drops 20 points from here, or whatever the original differential is, are very low. But when you look at the options premiums, you're still getting paid very handsomely. So that is my first argument why I'm liking short puts into earnings. Something I normally don't do. Normally I stay away from earnings. But these earnings seem very transparent to me, at least probabilistically. You never know what's going to happen. You never know what's going to happen, so you have to be cautious. There can be also always some bad accident. But the odds are clearly on our side. I would predict the most likely outcome here is stock flatlines, maybe goes down 1% or something, or goes up 1%. If there is a tail risk, I think it's more to the upside, and the least likely outcome, tail risk, to the downside. Which means if I go short puts here at 390, let's look at the stock chart again. If I'm going into that short 390 strike price expiration on Friday, or short 380, 385, if you want to be very conservative, 375, I think you're still getting about $3-4 for 375, right? So you're breaking even at 371. What are the odds that this thing drops 20 points from here? I don't think very high. I think the odds are we are coming out of this and not much happens, plus minus 2% or less. That is the most likely outcome. And my final argument why I like short puts here is even if we see a significant drop, even if this drops to 380 or 370, given the whole setup and given the market and macro setup where I'm pretty bullish on the whole situation, I do think that would be a perfect buying opportunity. So I think in scenarios and outcomes. If it actually drops, that's a good buying opportunity. If it doesn't drop, I collect the entire premium. That's why I'm short puts. Now, be cautious. You have to pace it. Always ask yourself the question, what if it drops to 350? Can I survive that? Be very cautious if you're a beginner. Just nibble on these things. Do not take excessive risks. Always something bad can happen. You have to be cautious. So I hope that was interesting. Let's see what the earnings bring, and see you tomorrow on the other side of this.